Okay, so the next loan product I'll talk about is conventional. It's probably one of the older loan programs because it started way back when there was only one way to buy a house. You had to put 50% down, and then you had to make payments for 1 to 3 years. Obviously, we don't have to work in those guidelines anymore now that Fannie Mae, Freddie Mac, and so many lenders have chosen to take part in the market. So, a conventional loan program is a program for someone who can come in with the normal buy down of 20%. That would be your down payment. Other lenders may choose to have a lower conventional down payment. So I know for my program, we can do 5%, 10% down, and sometimes there's specials. A lot of lenders, when they want to boost a product, will offer other incentives for you to purchase those types of loan programs. So let's take a look at some of the things my lender is looking for in a product. So FICO of 620 or better. These are for primary, second homes, and investment type properties. Loan limits are up to the county loans, and for Sonoma County, it is 897,000. So loan to values as high as 97%. So again, this is one of those lender specific caveats. Not all lenders offer that. Conventional loans can be used for a purchase or rate and term refinances. Loan to values as high as 80% on the primary home, 75% on the second home, and investment property, cash out properties. So investment cash out, what that means is that you can refinance and take money out of the investment property. So there's times you'd want to do that, like when you're trying to purchase another property, for example, or pay off one property and have only a mortgage on the second and the third. Everyone has different ideas of how they want to grow their portfolios. This is just one of those tools that doesn't limit you. High balance is available for loan limits over the county limit. So again, that's not offered by all lenders. This is one of those specific guidelines that my lender offers. Majority of lenders may offer this, so you do want to ask if I have a high balance, so something above the county limit, is that just a jumbo loan or does it stay a conventional high balance? So we have a product for that. You can do lender and seller paid temporary rate buy downs. Also, the buyer can buy their own, the borrower can pay for their own temporary buy downs. And those are huge right now in 2025 because rates are moderate. They're not as low as they have been, but they're also not as high as they've been. So people are still chasing the post-COVID rates of 2s and 3s. Probably won't see those again, but you can get pretty close with these rate buy downs. So it's also available on single, multi, and multi-wide manufactured homes, co-ops, only in New York. California, we don't usually have co-ops, although I have heard of very few apartments that were converted into purchase situations. So I believe there is one in San Francisco, and it's considered ownership, but you have cohabitation places. Well, not habitation, but areas that are common areas. And one-time closed construction loan can be conventional. So if you have any questions about a conventional, you'd like to learn more about a conventional loan because that's something you're interested in, there's a lot of different reasons to purchase conventional. Big one is you don't have to carry mortgage insurance premium for the full loan, whereas on FHA loans, you do have mortgage insurance for the length of the loan. So make sure you talk to a lender. If you want more information about that, it's erichardsrealtor@gmail.com.